Welcome, everyone. In today's market recap, we'll break down what actually happened across oil, gold, crypto, volatility, and U.S. indices. Rates remain elevated, volatility stays suppressed, and risk assets are struggling to find direction. Let's go chart by chart and connect the dots.
Finally, the S&P 500, SPY, finished marginally lower, stuck in a tight range. We had volatility during the session, but the close tells the story: indecision. This is classic late-cycle behavior. No panic, no momentum, no conviction. The index is digesting higher rates, slowing growth expectations, and stretched valuations, all at the same time.
Let's look at QQQ. The Nasdaq ETF closed slightly lower after a volatile session. We saw a strong sell-off earlier, followed by sideways consolidation, but no real recovery. Key takeaway: tech is losing leadership. Buyers are reactive, not proactive. Every bounce is being faded. As long as QQQ stays below recent intraday highs, tech remains vulnerable to further downside. Let's start with crude oil. WTI is trading around $59, slightly higher on the day, but the structure is weak. Earlier, we saw an attempt to push above 60, but that move was quickly rejected. This price action tells us two things: demand expectations remain fragile, and any upside is being sold into, not accumulated. The market is clearly not pricing in strong global growth. Oil is stuck in a lower range, and unless we reclaim and hold above 60 to 61, energy remains defensive rather than bullish. Now, gold. Gold is down on the day, despite higher uncertainty in equities. We saw a sharp intraday sell-off followed by a partial recovery, but price failed to regain the previous highs. This is important. Rising yields continue to pressure non-yielding assets. Gold is not acting as a strong hedge right now. As long as real rates stay elevated, gold rallies look more like relief bounces, not trend reversals. Let's move to crypto. Bitcoin is trading around 95,000, modestly higher on the day. The structure here is constructive but not explosive. What stands out? Buyers defended dips aggressively. Momentum increased into the close, but there is still no clear breakout confirmation. Crypto is behaving like a risk-on satellite, not a safe haven. It benefits from liquidity expectations, but remains sensitive to macro shifts. Now, volatility. The VIX sits around 15 to 16, which is extremely low given recent market swings. This tells us one thing very clearly: markets are not pricing in stress. Low volatility during choppy price action usually means positioning is cautious, but protection is underpriced. Historically, this kind of setup often precedes sharp, fast moves, not slow trends. To sum it up, oil weak means growth concerns. Gold soft means yields still matter. Crypto resilient means liquidity expectations. VIX low means complacency risk. QQQ and SPY mean range-bound and fragile structure. The market is not bullish, not bearish, but extremely sensitive. This is the type of environment where patience matters more than prediction. Thanks for watching, and I'll see you in the next market update.